big financial markets crash. Are you ready? Hello and welcome to the Lakhani's podcast. In today's episode, we dive deep into something that could shake the very foundations of the global economy, a potential worldwide financial markets crash, one that could unfold within the next 18 months. Now before you think, not again, hear me out. Because every crash, no matter the century, no matter the technology, follows the same eternal pattern: greed, overconfidence, and blindness to the signs that were always there. Today, I'll share not just the history of those crashes, but my own story, my own scars from the battlefield of finance, and how spirituality, especially the timeless wisdom of the Bhagavad Gita, shaped the way I see money, success, and loss. My journey, from boom to bust. My journey into the world of investing began in the 1980s, during the Thatcher era, when Britain was privatizing everything from British Gas to British Airways. Back then, I didn't believe in the stock market. I thought it was gambling in a suit. But destiny had other plans. When I joined British Airways Holidays as a financial accountant, staff were offered free and discounted shares. I took them, and overnight, they doubled. I was hooked. I met a local stockbroker who introduced me to options trading. He said, "Jay, don't sell the shares, make the market pay you rent for holding them." That sounded brilliant. I started selling covered calls, collecting premiums, dividends, and my confidence grew faster than my capital. By 1987, I was making more money trading than from my job. So I quit. 2 weeks later came Black Monday. In one single day, I lost £30,000, a fortune back then. I was unemployed, broke, and my wife was expecting our first child. That day, I learned my greatest financial lesson: greed blinds. The market humbles. Discipline saves. But I also learned resilience. Because when you fall and rise again, you never fear falling anymore. That early defeat prepared me for every crisis that followed: the Gulf War correction, the 2000 dot-com bust, the 2008 financial meltdown, even the COVID crash. I survived all of them because that first fall taught me what not to do. Why crashes happen, and why they'll happen again. Every crash begins the same way: exuberance disguised as growth. Let's go back in time. In the 1600s, the Dutch created the world's first speculative bubble, tulip mania. Flowers became fortunes. People who never even saw a tulip were trading futures contracts. Then one bad auction, one whisper of doubt, and the whole illusion shattered overnight. The first signal was there: overconfidence. Then came the 1870s long depression, built on borrowed money and blind faith in growth. 1929, the Great Depression, born from margin loans and mass delusion that stocks can only go up. 1997, the Asian financial crisis, triggered by foreign debt and herd mentality. 2008, the subprime meltdown, caused by greed, leverage, and complex instruments no one truly understood. Every era had its innovation, its new normal, and its arrogance, and every time, the market punished that arrogance. The present moment, the calm before another storm? Look around today. Stock markets, gold, silver, cryptocurrencies, all at record highs. AI stocks soaring. But beneath this glittering surface, the same cracks are forming. Massive government and household debt, now nearing $450 trillion globally. Algorithmic and AI-driven trading amplifying volatility. Speculation replacing analysis. Blind optimism replacing caution. And when the foundation is built on debt and euphoria, one small shock can bring it all down. History doesn't just repeat itself, it rhymes, and right now, the rhythm sounds all too familiar. The spiritual lens, wisdom from the Bhagavad Gita. In the Bhagavad Gita, Lord Krishna tells Arjuna, "You have the right to work, but not to the fruits of your work." That's not a call to apathy, it's a call to detachment. In the markets, as in life, attachment to outcome creates fear and greed, the two emotions that destroy investors. True mastery is to act with full awareness and discipline while remaining detached from short-term results. To stay calm in profit and steady in loss. When you trade or invest with detachment, you gain clarity. You stop chasing and start observing. The Gita's wisdom is not ancient philosophy, it's a modern risk management strategy for the mind. What smart investors do now. So what should we do in these uncertain times? 1. Stay grounded. Don't let headlines dictate your emotions. Stay calm, centered, and focused on fundamentals. 2. Stay liquid. Keep cash or safe reserves. Crashes are not endings, they are clearance sales for the prepared. 3. Stay detached. Don't fall in love with your trades. Markets move in cycles, your piece should not. Remember, you can't control the storm, but you can control your ship. The final word. History shows that crashes come and go, but those who remain aware, disciplined, and detached always emerge stronger. So, whether you're a seasoned investor or just starting your journey, this is your wake-up call. Don't just chase wealth. Build wisdom. Don't just seek returns. Seek resilience. And if you want to go deeper, if you're ready to master your mindset, sharpen your strategy, and elevate your life, explore my books on Amazon. Firstly, develop a winning attitude, a blueprint for mastering mindset and performance. And secondly, Forex Mastery, a child's play where I break complex trading into simple, practical lessons. These aren't just books. They're tools for transformation in markets and in life. Thank you for joining me on the Jay Lakhani podcast. Until next time, stay aware, stay disciplined, and stay inspired. And may the universe bless you with abundant joy and inner peace. With blessings. Jay Lakhani.